Hey guys, Mike here. So today I'm going to be talking about some cryptocurrencies like Atom, Maddox, VETS, which is of course ADA, Cardano, and then of course the big boy, Bitcoin. And I'm going to be going over a simple way if you're like me and you have a family and friends and a job and all this other stuff, you're super busy, but you want to trade or at least invest in cryptocurrencies and know, what is a good target price to get into if you're going to be trading it, maybe what's a good target price to get out of, or to set a stop loss. And so I'm going to show you some charts, and it's just, this is keeping it as simple as possible for these cryptocurrencies, okay? And as far as trading and something I've been playing around with. So if you are an expert in crypto or crypto trading, you can click off now. This is not for you, okay? This is simple for people who maybe are in it, but they're not sure when they're supposed to be buying in and getting out, or when they're just supposed to be getting in, dollar cost averaging in. But instead of dollar cost averaging here, maybe you can buy in down here, right? And so I'm going to show you these charts on that, as well as another index I've been playing around with, or another indicator, I guess you could say, that I've been playing around with as well, and kind of show you that. And so, we're going to take a look at that. Hopefully you get something out of that. Hit the like, subscribe button if you do, and only if you do. Again, I want to thank you guys for those who are buying the coldest water bottle. It does work well, especially since I'm really hot here in Florida, even though we got a thunderstorm rolling in. Hope you don't hear the thunder too much. Sorry about that. If you do, hit the link down the bottom if you want to purchase one of those. Also, if you do want to buy some crypto, don't forget to hit the link down the bottom right there. You have an account with BlockFi where you can earn interest, you can see right there. And they have started this month rolling people off the waiting list for the BlockFi Visa credit card, which has a 0 annual fee, and you can earn crypto back on your purchases, which is great. So don't forget to sign up for those down the bottom of the link right there. And let's go ahead and get into these cryptocurrencies and just a simplified trading version, okay? So one thing you notice about these charts is crypto has the same tendency to run in channels, just like stocks do, okay? You can see this one right here, started way back, it's like May 19th. It's been trading this channel since then, and you can see that channel narrowing starting in July, it looks like, or actually a little bit before July. And so, this isn't new though. If we scroll back, you will see this same channel before it did the big explosion it had up to 65,000. It traded in this channel on early 2021, starting the year, and went into February before the big move up. So this is the number one thing. Pay attention to the channels, define the channel, because they run on them usually for at least a few weeks, if not more, and you're talking about a 37% move up and down in that channel. If we move on to ADA, which is a very big popular one, Cardano, you'll see right here, it's been running in it since probably June 25th right here. Actually, I'm sorry, June 21st. And so you see that channel is narrowed over the last 3 to 4 days as well. You can see these down trending channels up here. Pay a close attention to those because you don't see those on most of these altcoins. But you can see these moves, from $1.31 to $1.49 is what this channel's in right here. And that's a nice move up and down. So if you can buy, when it hits that bottom support level, it usually bounces off of it, heads right up to the resistance. Sometimes it goes through, sometimes not. But you can make a nice little buck if you're trading it or if you're dollar cost averaging in. A little bit more when to get in. So Maddox is a very popular one lately right here. You can see June 24th, it started running in this channel right here. Again, you look over the last 4 or 5 days, it's narrowing, and it actually broke down below its channel to go into the other channel it was previously trading in about 2 months ago. And if you look over here, you see the downtrending channels, just like you did on Cardano. And it had the big explosion, obviously, before that happened. And if you look over the channel I was talking about, you can see it right there. It was running in that upward channel. Now we're down where we may start trading this channel. We'll have to see from the 79-cent range up to around the 99-cent range. Who knows? Last time we recovered pretty fast on this. And then VeChain's another popper right now, very cheap. It's running around 7 cents or whatever. Again, same time frame. Started channel around June 24th, 25th. Started trading in this channel. Look at the downtrending channel right there. Shocker. The same as all the rest of them. These charts look almost identical. Okay. There's the channel. It was trading in before, as usual. These channels aren't new. And so they'll trade in there, like I said, anywhere from a week to 2 weeks, maybe longer. But if you can stay there and catch it when it bounces off the support level, then you might be able to make a good trade up. It actually increases your odds quite a bit. Or if you're dollar cost averaging in, which I do both, it's a great time to actually do it. And then we look at Atom. Atom's a little different here. Atom is you can see the downtrending channel right there. There's actually two of them, but I didn't draw out the second one. Same kind of pattern you see, same channels, but this one busted out. This one did a nice move from 930 all the way to like 1455. And so big move up. It did break down today. Broke down through that trend line right there for the first time in a while. And so now you see what I'm talking about when I say simplified version, right? Just simply drawing the support and resistance levels at each level, right? Because we know cryptocurrencies do what? They move a lot faster than stocks up and down. I mean, it's massive. 20% drop is nothing in cryptocurrencies, nothing. I mean, we've seen them drop, 80% in a few weeks. So, I mean, there's nothing to that. But let's say, for example, you're dollar cost averaging in. You are a long-term investor in this, and you're just trying to, buy some here and there. Well, why not know if you put those support lines there, because each one of them is going to have their own, right? That channel. Then instead of buying blindly up here, you might say, "Oh, wait a minute, that's where I was going to buy." But now that I know that's resistance, and if it bounces off, starts coming down, well, hey, look here, the support. Well, I'll just buy down in this area and gain an extra, buy it at 20% cheaper than I would have bought it up here, just blindly dollar cost averaging in. Okay, and you can do other things. I mean, you can add in the EMAs if you want to. I find that really doesn't do a whole lot of good for me when I look at it. But this is the easiest way I can do it right here if you're dollar cost averaging in. And imagine if you do that with multiple times. I'm talking multiple times over the years, and and you're saving 10, 15, 20% each time you dollar cost average in. When it does have those big moves, it's going to be a big return, right? Then if you're trading, the way I have done this, I also use the VWAP, which I'm not going to in this video, but when I'm actually going to do a trade. And the more I thought about it, I better go ahead and at least give a somewhat of an introduction to the VWAP. There are literally 8 to 10 minute videos just on the VWAP. And so let me give you a quick 1 minute little intro here. It stands for volume weighted average price. The reason why it's so important is because institutions actually use this indicator to move in and out of trades. It takes into consideration the volume and the price, and it gives more weight to high volume time frames, which is huge. And looking at Adam's chart is when it made its big move, and you look at the VWAP there, you got the middle line is the VWAP line. And so as you can see, when it trades above the line, goes through it, it says, hey, you might want to get into it. When it trades below it and breaks it, then you might want to get out of the trade. So let's say, for example, with this one, you got your support line right there. It's around 1170, bounces off that a few times, breaks through the VWAP line on the upward trend here. So you'd have got in around 1175, it looks like. And if you did that, obviously it would have moved up. Then it would have traded sideways, came down. It bounced off the VWAP line to go even higher above 13. Traded sideways. Then we go into the next trading day you can see. And right there around 1330, I would have got out, or anybody for that matter, because it would have broke the VWAP line. Or if you wanted to stay in, you could. It broke it again around 1345. Could have got out then as well. Wait for it to bounce off the bottom line, go through VWAP line, to go ahead and get back in if you wanted to. And if you look, as we go sideways here, you go into the next day, you could have ended up getting back in this trade around 1355. Rode it up to 14 something before it told you to get out again. Obviously trading sideways, and if you decided to trade blindly, you wouldn't have saw the fall coming here. As you see, the VWAP line is slowly starting to trend downward, falls off a cliff the next day, and then continues to go off a cliff to around 1280. Full disclosure, I do have long-term positions in each one of these that I'm building out, and then I obviously trade each one of them, okay? And so, another thing I've been starting to use, I'm trying to figure out how to coordinate this as well with also the support and trend lines and my VWAP and all this stuff. But most, I think, I guess really more for long-term trading or long-term investing, but it could be used for swing trading as well, is the Fear and Greed Index. And so this is the Fear and Greed Index. If you've never seen it before, right now we're at 25, which is extreme fear. The lower the number, the more fearful we are. The higher the number, the more greedy we are. And if we just look down at the chart right here, and we switch over to the max version, you can see that we haven't been this fearful since the crash last year. And so just to take an example, this is 25th of March through, let's say, May 15th or something, right? And let's go to a regular chart to see how that matches up. You see that's March 18th through May 9th. That was the big run up. So we got a big run up on this chart. big run up on a regular chart of it was Bitcoin we were looking at there. And so this is what I'm trying to figure out. If you're between the numbers of 10 and 20, what does that mean? Are we getting ready to move up? If you're between 85 and 90, I'm very greedy. And so there is a way to use that fear and greed index to your advantage. It can be tricky because greed, one thing I noticed in the chart, like it'll stay in the between 80 and 95 range for weeks, right? And while crypto, especially Bitcoin, continues to rise. That's what happened when we went around 67,000, I think was the high of Bitcoin. But then there's these, once you get in that range, you know you're fixing to get ready for a massive drop. Usually it drops down in the 40 range, and then you see it immediately recover. And so there's a way to use this when you get in your, right where we're at right now. This is one reason you see people are just they're very fearful. When people are fearful, what usually happens, like time after time, they go up. Right? Eventually, I think a lot of people are expecting that move, as you can see right here. With all the news coming out, the Bitcoin price getting ready to break free, Bitcoin, Ethereum, blah, blah, blah. You got all these different articles coming about. Is there going to be a breakout? The run of 9,000 was delayed. Get ready for the next one. The dip before the run, while we're headed for 250,000 Bitcoin. Big breakout ahead for Ethereum. Shiba stuff. Dogecoin's another one. Will it hit $1? And you can see, guys, looking at all the cryptocurrency news, everybody's waiting for the next breakout, right? Because why? You saw the charts. All the ones I showed you, except for one, have been consolidating in the channel that they're in for like weeks now. What they do before their breakouts usually? Consolidate in those channels before the breakout. Whether it's going to happen this year, next year, who knows, okay? And so that's why I want to put this simplified version out there for people who they're working full-time, they got families, they don't have time to be studying crypto charts of all these different cryptocurrencies and come up with all these different indicators. So at least I just want to come up with the simple way to help you out in that way in case you're not doing that. And so again, not financial advice, because they always say the trend is your friend until the end. Well, right now, and that's what the key to actually doing anything, whether stocks or crypto, is learning what their trends are, learning what the patterns and stuff are in these things, okay? Then eventually those will break like they always do. But you just got to figure out what they are, okay? And you can see by those charts, it's pretty obvious what they are. Again, this is not for crypto experts. We know you know everything about crypto. This is for people like me who got in late and other people who just want to make some money off this stuff, okay? And I just want to put that out there to you. I hope you got something out of it. Hit the like, subscribe button if you did, guys. I really appreciate it. Again, not financial advice. Don't forget that link in the bottom down there. Open an account with BlockFi so you can get interest on your crypto that you actually purchase. And I will end up seeing you guys tomorrow.